What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about Google, and Google stock basically dropped close to 6% after hours after they reported earnings for the third quarter fiscal year 2023. I think it's a little bit of an overreaction. Let me know in the comment section down below because of a small miss in Google Cloud. But we're going to talk about all of that and also go over the intrinsic value for the company and where the fair value really is for Google moving forward. As always, if you enjoy this, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. The link to our Discord and Patreon is going to be down below. If you're interested in joining, there is a 16% annual discount that does expire at the end of this month. We'd love to have you on board. You get access to all the intrinsic value spreadsheets, members-only private videos, individual stock reports, and on top of that, the early access to our MoneyVest Pro platform that's going to be available in early 2024. You can also go to moneyvest.com to sign up and get the early access over there. So this right here was the headline. Obviously, Alphabet shares drop as cloud miss overshadows better than expected overall results. So the numbers, 11% growth on a year-over-year basis when it comes to the overall revenue. So very nice growth considering the environment that we're in. I think this was a good quarter. Right? Obviously not out of the par per quarter, not like, extraordinary, really good results, but not bad either. I think 11% is really good considering that interest rates are high and ad spend is down from a year ago because of, again, the macroeconomic challenges facing the overall economy, the slowdown and everything that's been happening. Now, operating income wise, up 28%. It's crazy how, 28% is the operating margin. But if you take a look at the growth here, 21.3 divided by 17.1, we're looking at a 24% growth, not 28%. I was kind of confusing that. 24.5% growth on a year-over-year basis for growth in operating income, right? These are the type of results that kind of get overshadowed with just a small miss in Google Cloud. 28% margin, so margin expansion for the company. And we did have net income also increase. Take a look at this stellar growth in net income on a year-over-year basis, right? 19.6 divided by 13.9. We're looking at a 41% growth, 41%. I will forever be in wondering what Wall Street looks for when it comes to these numbers. Like down 6% when you're looking at a beat on EPS, beat on revenue, and a growth of 24.5% in operating income and over 40% in net income. Like, someone explain this to me. This right here is going to be the broken down by segments, right? So we got Google search and other, $44 billion, up from $39.5. YouTube ads, almost $8 billion, up from $7 billion. In Google network, $7.6 billion, that's up from slightly down about from $7.8 billion. Overall, Google advertising up from $54.4 to $59, almost $60 billion. And I think Meta is also going to report some very strong numbers today after the bell, considering that Google reported some phenomenal growth on a year-over-year basis. Now, this right here was the biggest reason why the stock pretty much sold off is Google Cloud right here. This was a miss from analyst expectations standpoint, and on a year-over-year basis, it still grew. I mean, if you take a look at 8.4 divided by 6.8, we're looking at a 23.5% growth on a year-over-year basis. And just because it didn't grow at 25%, right, is the 6% sell-off in the stock just absolutely does not make sense in my opinion. And total revenue is obviously up 11%. From $69 billion to $76 billion. So here we go. Earnings per share, $1.55. Expectations were $1.45. Revenue, $76.7 billion. And expectations were just under $76 billion. Advertising revenue, YouTube advertising more specifically, almost at $8 billion, $7.8 billion expected. And Google Cloud, 8.4, which was still up 24% year over year versus 8.6 billion expectations. See, that's one of the things that I've mentioned in my previous videos is that consensus expectations are complete BS, right? And for the lack of a better word, they are useless, right? And the reason for that is because they kind of put these company earnings on a hit or a miss sort of black and white type of metric as opposed to looking at the year-over-year growth, right? For me, it's always the comparison for the company versus their previous year, right? So if Google, for example, grew revenue 11%, grew operating income 24%, grew profits by over 40%, grew YouTube advertising and Google Cloud by 20%. That's a phenomenal quarter. That's like an A+ quarter for the company. And yet the stock price obviously is down. This right here is going to be the overall growth. And as we know, Google is actually one of the best, highest quality companies out there. Consistent growth in revenues, consistent growth in profitability, consistent growth in operating income. net profits, everything's been moving in the right direction. Share count is pretty stagnant or somewhat flat over the last 10 years, from 13.5 billion down to 12.8 billion shares. And profitability wise, I mean, there's no complaints. This is just phenomenal numbers, 55% gross margins. We're looking at net income margins of 21%, return on capital, equity, and total assets well in the 16 to 20% range. So very strong numbers over there. Now, valuation wise, I would argue that Google's valuation now is coming down to a lot more reasonable levels, considering that it's trading at, just a little bit over 24, 25 times price to earnings. Price to sales trading at a little bit under 6, right? Especially after the sell-off today. Pre-market, enterprise value to EBITDA is going to be over 18. And we got price to cash flow up a little bit over 16 to 17 times, right? So these are, I would say, quite reasonable metrics. And compared to the market, this is from a growth adjusted standpoint, I think Google is trading at a very attractive valuation. Balance sheet's phenomenal. Again, we don't have to spend too much time on this, but total cash and marketable securities, $113 billion, with their long-term debt sitting at around $14.7 billion. In fact, their total liabilities are $109 billion. So total liabilities are a lot less than their total cash and marketable securities, not to mention some of the other assets on the balance sheet, which makes their total assets well over $365 billion. So phenomenal numbers. Now, if you come over to our expectations, we're going to do some calculations here. Now, EPS expectations for Google over the next 5 to 6 years is going to be 17 to 15%. Free cash flow has grown by over 22% over the last 10 years, and share count has gone down by about 0.29%. So I'm going to decrease their share count by 0.5% now, considering that they've got more cash, and I think they're going to do more share buybacks over the years. Net income growth, I'm going to keep that steady at around, let's say, 16%, kind of taking that mid-guidance. Price to earnings multiple, I'm going to go with about 20. I want to go with 20, but let's just start off at around 20, and we'll go from there. Free cash flow multiple and growth rate, so free cash flows have grown by over 22% in the last 10 years. Now, we want to be a little bit more conservative here because, Google is also getting bigger and bigger. So as numbers get bigger, it becomes more difficult and more challenging for the company to grow. So let's just go with 18% right now. For free cash flow growth, we'll go with 18 times free cash flow multiple. We'll do a 12% discount rate, obviously, 10% margin of safety, and we'll weight this a little bit more towards the actual net income for the company, right? So 50-50, and we get to a fair value, which is identical to what the current fair value is on our spreadsheet at $96. Now, if I do weight this a little bit more towards the net income side, right? 75% net income versus 25% free cash flow, we get to a fair value of close to $109 per share. And right now, of course, Google is trading at $131. So it's not perfectly trading at the intrinsic value per se, like 15-16% downside still needed from where it is at the moment pre-market, but you get the idea. There is some flexibility here, so flexibility range will put us at roughly around 114 on the higher end, so plus 5% is going to put us at roughly under 115, and right now we're at 131. So right now we're coming down to a very, very important level of support. So this green rectangle is going to be a huge area of support and demand for Google. And I wouldn't be surprised if the price actually does bounce back higher intraday. I wouldn't be surprised, like I said, if Google gets bought up intraday and starts pushing back higher, considering that the numbers were phenomenal. With one small cloud miss, just doesn't justify selling off over 6%. Now, if it does end up selling off and breaking below this level, and if you do see some accelerated selling pressure, well, then I will be ready to scoop up more shares at that 200 simple moving average and that support at $115 per share. That's going to be a very, very important level to watch for me, and that's going to be the intrinsic value, somewhat in line with our intrinsic value for Google. And actually, $109 sits perfectly at this support right here. So this next support at $109, that's the previous resistance potentially acting as a new support for Google. So those right there are going to be a couple levels to watch. This is where I would be looking to add more shares and buy more right here. This area is going to be my sweet spot for Google. But let me know in the comment section down below, what do you think about Google's earnings, and are you buying, selling, or holding? What are your thoughts on this company? As always, if you enjoyed it, found it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. And of course, link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, members only private videos, intrinsic value spreadsheets, and the early access to the MoneyVest Pro platform. Everything's going to be available with the link down below. So always happy investing. I'll see you all in the next video.